Hello, friends. Welcome to this edition of IPO Review, and you're watching it exclusively on ICICI Direct. Like every time, today we are reviewing another IPO. This time it is Paradeep Phosphates IPO. The IPO actually is opening on May 17 and will be closing on May 19, and subsequent listing is likely to be happening on May 27. This company is the second largest producer of phosphatic fertilizers in India. The IPO size is roughly around 1,500 crores, and we're talking about 1,000 crores, which could be coming through sale of fresh issue of shares, and another 500 crores, which is coming from sale of shares from existing promoters. Now, the business actually is very interesting from the perspective of fertilizers application is very largely to the industrial use and the rural India. Let's try and decode the potential and the possibilities of the business. Let me now welcome the management of the company, Mr. Narayan Suresh Krishnan, the Managing Director of Paradeep Phosphates Limited, and Mr. Sabalil Nandi, Chief Operating Officer, Paradeep Phosphates Limited. Gentlemen, welcome to the show. Mr.
Thank you.
Krishnan, let me first come to you. My first question, please help us understand the business model of the company from the perspective of manufacturing, trading. What's the sort of core revenue proposition here?
Yeah. Thank you, Piyush. When it comes to the business model, I think it's important for us to realize that we are part of the larger agriculture ecosystem in India. We are providers of phosphatic raw material required for farm as a basic nutrient. And as you all understand, that phosphatic nutrient is something that is very crucial for the farm health and farm productivity. And we as a country today import all the raw materials required for this key manufacturing. We as Paradeep Phosphate are one of the largest in terms of the capacity that we have in the private sector in India. And we have a strategy wherein we not only produce one grade, we also produce number of grades of phosphate which are required. And the thing that as a part of our business strategy that we are doing today is not only expanding our capacity from where we were last year at 1.2 million tons, we're also ensuring that with the capacity increase, we get a large fungibility between various grades of NPs and NPKs that a farm needs. This will ensure that we are able to provide and meet the needs of farmers to a very large cross section of farmers right across central, western India to eastern India, where we are already present. That's the first thing. Second thing important for us is to be successful in our business strategy is to have a good backward integration to ensure that we are able to add value in terms of the manufacturing activity we do. The value addition comes in the form of making phosphoric acid, making sulfuric acid out of the plant, and also ensuring that the byproducts are well handled and utilized in the right way in the right industry. And the third important thing is to continuously improve the infrastructure we have in terms of handling. As you all know, that we already have a private berth at Paradeep, which handles all the raw material that we import, and it is very well linked between the site and the port. So this is where we stand today, and I think the way we are progressing in our business strategy is to first look at the need of the farmers in our core marketing areas, and from the need is where we decide in terms of the product needs that the farmer will have, and accordingly we manufacture the right kind of NPKs for providing to the concerned farmers. The farmer is the focus, the soil health, which is the key for the farmer, becomes our focus consequently, and we are able to work this around very well. And over the last few years, I must say that besides diammonium phosphate, which is our main product today, we've also now doing a number of NPKs from our project, and which are all very well accepted and received by the farming community.
Very nice. In fact, I was going through a product portfolio, includes phosphates, NPK, potash, gypsum, soil conditioners. From that perspective, Mr. Krishnan, before I go to Mr. Nandi, what will be the top two revenue sort of products in this entire list? Like, how much would be the split if we try to?
If you look at if you look at it as we speak, when we get into the full capacity of 1.8 billion tons, we expect about 1/3 coming in from DAP and a balance 2/3 from various grades of NPKs. Of that, more than close to 50% will come from N20, which is a flagship grade for us.
Okay, that's very useful information. Mr. Nandi, when actually you imagine a fertilizer business or a chemical business, which is exposed to both the industrial consumers, but a very sort of large farming consumers, usually the price sensitivity is which every investor will start thinking about how much the business really has stable margins, what sort of price swings actually you see in your business, So please help us understand, Mr. Nandi, how in terms of the price stability and the margin stability you see in the business.
There are two parts to the answer. One is what's happening globally, and the other is what is happening in India. So globally, what we are witnessing is a historic high when it comes to crop prices, especially in the developed nations, whether it is in the Americas, both North America, South America, or in European markets. The crop prices have really gone through the roof. And this is resulting in higher farmer and affordability in those countries, which means that the farmers are maximizing their crop acreage. They're also maximizing the fertilizer consumption. And this in turn is resulting in higher fertilizer demand and higher fertilizer prices. So today, if we see what is the DAP price, DAP I'm taking because it's the most widely sold phosphate, DAP prices are at a historic high levels. Of course, it has been aggravated further in the last 2.5 months due to the war, but even otherwise, even before that, these prices were at a historic high. Coming to India, due to certain timely interventions and because, and rightfully so, the view that the impact of the war should not be, should in no way affect our farmers, given that almost 55% of our population is dependent on agriculture. There has been a decision that has been implemented, not passing on these price spikes to the farmers. So, and also because there is a conviction all around, both in the industry as well as within the government, that these price spikes are relatively temporary in nature and that over the period of time it will stabilize. So on a temporary basis, the government has intervened, and it's been public knowledge as well that the subsidy amounts have been increased so that the farmer end prices do not shift. And so at the moment, we have seen that the Indian farmers have not been affected by the price increase. Yes, there have been certain constraints related to availability because in the global markets, not much of imports are available, wherein India imports close to 50-55% of their their DAP consumption. But for the last few months, not much of imports have happened, mainly because of lack of availability. But as far as prices to Indian farmers are concerned, I think the prices have remained fairly stable, and this has happened, or this has been made possible with the intervention by the government.
So sir, my if I just try to nail it down further here, my question would be from the perspective that you produce a fertilizer and then you're going to sell to a consumer. Now, there, as we know, subsidies are like a sort of a thing in this industry. So how's the working capital scenario here? You get the end price absolutely at the same time, or there is some component which comes from the government? Like how we should imagine the cash flow and the working capital here?
So the way it works is that today the whole process of subsidy disbursement has been automated to the extent that right from the time that a fertilizer bag leaves the plant to the point when the farmer buys it, it can be tracked. The farmer today buys the fertilizer bag through a point of sale machine, POS machine. And once he buys, within a certain period of time, actually the manufacturers get the subsidy credited to their accounts. There is a process of certain bills, etc., to be raised, but that's so the payment or the disbursement of subsidy for the last 2 years has improved significantly, and which has resulted, if you see our 9-month result, you will find a significant dip in our finance costs, courtesy the timely payment of government. And this is not the first time. This is the second consecutive year that this has been made possible. In terms of the working capital management process, we deal with a consortium of banks, which is led by the State Bank of India. It has both the private sector banks and the public sector banks in its fold. And most of them are non-fund based limits available to us at a nominal interest rate. And also in terms of the point that you mentioned about our margins, if you look at our 9-month performance, we are at 592 crores of EBITDA as against a last year number of around 484 crores for the similar 9-month performance.
Right. Mr. Krishnan, let me come to you. Now, as you understand, about 500 CR of the funds which are getting raised to the IPO, they are actually going to get, they're going to be used for acquiring the Goa facility. What it really is going to actually imply for the company, how much sort of trajectory is going to change, what perhaps could be significant from a revenue or a profit perspective as we look 1 year, 2 year, 3 year down the line? Please enlighten us.
Yeah, as far as the Goa acquisition is concerned, this is an acquisition which is going to significantly give us both capacity in terms of manufacturing capacity and also our ability to work with some of the large and mature markets where NPs and NPKs are prevalent today. Just to give you an idea, Goa is a West-based fertilizer factory where we have 800,000 tons of phosphatic capacity. And all the phosphate grades that Goa makes are specialty in nature. They make specialized N19, for which they are the only manufacturer in the country today. They are also capable of making other grades like N28, N10, and N12. So what it brings to us is a basket of NPKs which are more specialized, more specific to the crop needs, and an ability to offer a wider range of product. That's the first one. Second thing is Goa is a 50-year-old brand. The Jai Kisan brand, which comes along with Goa, is something which is absolutely a leader in some of the markets that it is sold, which include the large markets of Maharashtra. And Goa has a very, very strong presence in Maharashtra market, in the Marathwada region. It's very strong in the parts of Karnataka. So these are markets that comes to us along with this, which is very positive. In terms of the overall size, is 1.2 million tons, literally doubling our capacity as far as the facility is concerned. And in peak capacity, when we start working there, the turnovers of this would be upwards of 5,000 crores that we'll add to the company. And this is a very important line for us because it gives us a product diversification and it also gives us an ability to access some of the most promising markets for NPKs in India, which will also be produced from Paradip.
Right. And Mr. Krishnan, I was tempted to actually think around it's a specialty product, bulk of it's a specialty product. Would it be fair to say that the margins actually are going to trend higher, maybe 12 or 24 months down the line, because specialty should imply higher margins?
Absolutely. I think when you look at NPKs manufactured from standalone granulation trains, which imports phosphoric acid and maintain the specialty grades, there obviously gives you a better margin than normal grades.
Right. Fair enough. Coming back, Mr. Nandi, we are also seeing a sort of a split here, 500 for the Goa facility, 500 again basically coming as a stake sale from promoters, but we still have another component here, another 1/3 almost. What's the plan for that? How a company really intends to use that?
So as you rightly said, in fact, that's one of the messaging that we have also maintained with our potential investors, that 1/3, 1/3, 1/3 split. So 1/3 is going for the Goa plant, 1/3 is going as OFS. Large chunk of that OFS is going to the government of India because they're exiting the company. And the last 1/3 is actually coming to the company for retiring certain debts and for general corporate purposes, which will also be used either for certain fixed projects that we are undertaking or for retiring certain debts. So basically to strengthen our balance sheet.
Right. Let's also shed some light on the net debt right now at present. Like, what is the sort of cash on the books and how much is the net debt?
So as of the December 31st numbers, we had around 600 crores of long-term debt in our books, which is related to the various capex projects, etc., that we were undertaking, and around 1,600 crores of working capital debt that we have had. We have also been carrying healthy cash in our books, which has been, as of that date, which has been close to 700 crores. So the net debt is obviously at the point deduct the cash that is available.
Absolutely, fairly manageable. So now let me ask you one more question here, Mr. Krishnan. Another question will be: any plans in the future if the company is really thinking around any sort of acquisition in the overseas markets, or largely the company is going to be India focused, like any acquisition of mines, if there is a muric potash product you have, so any sort of mine acquisition or any overseas business acquisition, like what's the sort of focus here?
Primarily, you must notice here that the company has got a very robust strategy, which is taking our capacity from 1.2 million tons to 3 million tons. So I think over the next 12 to 18 months of our journey today, will be to complete the project that we are already on way, ensure that we are integrated and deliver the kind of free cash flow that we anticipate to do. I think so. I would think that the management focus over the next 18 months will be around the activity that we already have in hand. Being a focused phosphatic player, obviously, I believe that once we are through with this phase of growth, we will certainly be open to ideas. But our focus will continue to be for agri inputs in specific, and I would be very clear. As far as backward integration is concerned, we believe there's enough value to be created in going into value backward integration by creating capacities in India, and that they are a sure shot in terms of returns for us, and that will be our first focus, not any mining activity at this stage.
Well, that's the clarity on capital allocation. I think the last question, Mr. Nandi, I think which should be coming here is from the perspective of the business and the current environment, which you had touched upon in one of your answers. Right now, with what is going around, because the prices are volatile of the products, what is your own sense? How are we looking for this year? Maybe 6 months, 9 months down the line.
Again, if we were to give certain figures which have been in public domain, the country's total fertilizer stock has come down vis-a-vis what it was last year, less than half. Again, I'm talking December 2021 with December 2020 was something like 18.7 million. December 2021 8 million. So this 10 million shrinkage is, of course, has been caused due to global events. Because of the inability of the country to import in as much numbers as they would like to. Domestic manufacturing has been fairly even. Most of the Indian players, and we included, have done well. So in this backdrop, and given that the war is raging, with countries like Russia who control a lot of raw materials, like 22% of ammonia exports globally come from Russia. We as a company do not buy a single ton from Russia, but there are other customers who buy from Russia who are now reaching out to our suppliers for getting their ammonia allocation. For example, we have a long-term contract with one of the nationalized companies, which is Qatar, one of the large aggregators in the world, like Trump. So they have reached out to them, and we are also, as a consequence, though we have a long-term contract, we are facing the heat of both in terms of availability to confirm our quantities with greater lead time, something like 40 time. That's putting an impact, but we have, because of the strength of our supply chain, we have been able to maintain our manufacturing numbers running at a very steady capacity utilization. Now we are going forward with the Goa plant coming in, plus completing the acquisition, as I was referring to you. As of last year, we were at 1.2 million, 12 lakhs. Now we are at a run rate of 15 lakhs. With the acquisition of the Goa plant, this will become 27 lakhs because Goa has 12 lakh capacity. And then by September, we will be adding another 3 lakhs to our. By the end of September, we had 30 lakhs, moving from 12 lakh to 30 lakh. And we believe it's our responsibility, and that's the message that we're getting from our farmers, from our channel partners, or even from government of India, that we need to maximize our production and to bridge this gap in terms of capacity, in terms of inventories that are there. I think for the next 2-3 years, we have to just run flat out. And we are committed to doing it. There is no dearth of market to absorb the products that we will make. We have to correct the demand-supply imbalance that is there currently. And for doing that, large players like will just have to run flat out.
Well, Mr. Krishnan and Mr. Nandi, thanks a lot for joining us on this show, and we wish you all the well for this IPO. Indeed, Paradeep Phosphates is a company which is operating in a very essential space. And what I'm drawing out here is this is a story again of very high capacity expansion. So with that, thanks a lot for joining us on the show, and it's a wrap for this show.
Thank you.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.